Let's clear this up. So this is Bitcoin chart. Let's go to the weekly time frame. So this is the weekly time frame. Now, there's a resistance, a long time resistance on the weekly time frame. I hope you guys can see the resistance. So let me draw it out to understand it better. So this is a resistance. This region is a resistance, right? There was a time price was here, and if you don't wait for a particular candle to finish its formation, you can end up entering a wrong trade, right? Because there was a time the candlestick was really here and it was like a full body green candle. But at the end of the week, remember we're on a weekly chart. So at the end of the week, the price came down below the resistance. In that case, we will not consider this a breakout. I told you when you see a long upper wick, remember in our week basics lesson, we said the upper wick represents the activities of the sellers. So at this point, it means that sellers are entering the market because you have this long wick. So what this means is that the buyers were able to bid the price up, but for some reasons, sellers entered the market and the sellers were so many in the markets that the price dropped below that particular resistance. So when you see things like this, you don't want to enter because there's no breakout yet. It is just the wick that ended above the resistance. It is not the real candle body. If you are going to consider this a breakout, the candle must end above this region. Do you understand? The candle must end above the resistance before you consider that a breakout. So in this case, some people will have entered the trade around there thinking there's a breakout, right? Some people will have entered around here thinking there's a breakout, and what happens to the price? The price came down. So in that case, they are stuck in that trade. They thought the price would go up, but at the end of the day, the price went down. It looked like a breakout first, but the institutional traders tricked you to enter that trade and then lose a lot of money. So for a long period of time, this has been a resistance, and as of now, we have not broken that resistance, right? So again, this was another trick with this week here. This was another trick. This was another trick. This also was another trick. This area. So we have about 1, 2, 3, 4 breakout traps. So if you thought price has broken out of this resistance and you wanted to take a long trade, you wanted to buy, you will have lost huge amount of money on this trade because immediately price got to that area, it came down, right? So assuming you got into a trade, a long trade here, anyway, your stop loss will have protected you from losing huge amount of money. That is why it is good to set stop loss. And don't worry, we're going to be talking about stop losses and how to set them in the coming videos. So these are breakout traps. You don't want to enter a trade where the breakout has not been confirmed. Do you understand? Let's look for other breakout traps. Let's clear this up. Yeah. So we got another one. We know that this area, this particular area is the resistance, right? This particular area is a resistance. Let me change the color. I think red looks better, right? So this area is a resistance. There was a time price was above it. With this week, what happened? And I told you when we have this long upper week, it represents activities of the sellers. So what happened? Some people must have entered a trade here thinking the candle was going to end above that particular resistance. It is very crucial that you stay patient in the market. You allow candlesticks to end before you take trades because you don't know what is going to happen to a particular candlestick while it is forming. Right now, we don't know what is going to happen to this present candlestick that is forming that will end in 15 minutes. We don't know what is going to happen to it, if it's going to be red or it's going to be green. So you don't want to enter trade in the middle of candlesticks formation. So for example, this was a breakout trap. This area was a breakout trap. This area was a breakout trap. This area was a huge breakout trap. Do you understand? Sometimes it can be tricky. The candle ended above, right? The candle ended above the resistance. In that case, you will consider this a breakout. But remember what I told you, you don't take trade instantly after a breakout. You want to see a retest of that region before taking a trade. So let's say you wanted to take a trade. You don't take a trade immediately this candle broke out of this resistance. You want to wait for the candle to come down to retest it before going back up. So you want to be taking a trade at retest. But what happened at retest? Look at the candles formation well. There was no retest at all. Instead of retesting that region, what happened to the price? Price went below it. So at this point, when the breakout happened, price was supposed to come down a little bit to this region before going up. But what happened? Price broke down below that resistance again. So in other words, that has broken the market structure. So that is no more a breakout because there was no retest of that region. Do you understand? And when price went up, which was a fake breakout, then it broke below it with this red candle. I don't know if you can see this red candle. This red candle broke below this resistance, and once it broke below resistance, price went down. When price went down, you don't want to take a trade yet immediately after the breakout, right? You want to take a trade at retest. What used to be resistance served as support when price was above it, and when price broke below it, right now is serving as resistance. So when price broke below it and came down, we are supposed to wait for a retest of that region. And what happened? There was a retest here and there was a retest here, right? So when the price retested this area, what happened? It came down. This would have been a good trade. Taking a trade here or here could have been a very perfect entry for a short trade. I want to look for one more example for you so you can understand this better. So in this example, we'll be using support, right? So this is a support. This is a support level, right? Price touched it, went back up. Remember, support supports the price. So whenever price touches support, it bounces until that support is broken. So it touched it here again, it bounced. It touched it here, it bounced. It touched it here, it bounced. All this region that you can see the wicks, they are breakout traps. They just want you to feel price has broken that place so you can take a short position and lose your money. The only time there was a real breakout in this region is this place, right? So this was the only time there was a real breakout, and the candle ended well below the support. And when the candle ended well below support, I told you it's good to stick to your rules. And the rules is you want to be entering a particular trade after a retest of that breakout. So let's say you entered a trade around this area. You are entering immediately. So remember the rule. You want to enter a breakout trade after a retest of that breakout region. So you just don't enter a trade immediately after the breakout. You want to wait for a retest. And we got our retest here. Remember? So price came down. I told you 70% of the time price will retest where it broke out from. So price came back up to this area to retest it before going down, right? So this area could have been a place to enter a trade. Let's calculate that trade. Let's calculate that position. So that could have been a 28% profit, pure profit on your trade. So that's how it works, and it's not really complex. You want to get it right. You know that for a breakout to happen, a candlestick on that particular time frame. So it depends on the time frame you are using to trade. If it's 4 hours, your resistance on 4 hours might not be a resistance on the daily, and the resistance on the daily might not be a resistance on the weekly. So it depends on the time frame you are using. So if you are using a 1 hour time frame, it means the candlesticks form in 1 hour, right? So if you are using a 1 hour time frame chart, you want to see the 1 hour candle body end above resistance if it's a breakout, or ends below support if it's a breakout. Do you understand? So you want to keep that in mind. And remember, it is very crucial for every breakout, you must wait for a retest of that breakout before entering the trade. I know there are some times you do not even wait for the retest of that area, but that's later. As you trade more in the market, as you gain more experience, you will know how to be more flexible with your entry and exit. But for now, make sure you wait for a retest before you enter a trade. It is very crucial you follow the rules. The reason why many traders fail in the market is because they do not follow the rules. They do not get their mind right. Their psychology of the market is very weak. Do you understand? And you don't want to be part of those traders. Everything we have said in the illustrations are here. So let me give a quick recap. Breakout traps, we said sometimes the wick of a candle could break out and it seemed like a breakout for a perfect entry. Then the trend reverses against your position. That is what I'm talking about. Do not use wicks as your breakout because they do not count. Breakout traps, they are known to make traders lose a lot of money in the market. The fake breakout deceives, so patience is very key in the market. So the third one is the body of the candle must completely break the resistance before any entry. Remember, body of the candle must break that resistance or support before you enter any trade, before you think of it as a breakout. The long upper wick tells a trader that there's a bearish rejection. And what do I mean by bearish rejection? It means price was supposed to go up, but the sellers entered the market and started selling, so price started dropping. So that is what is called a bearish rejection. But for a long lower wick communicates bullish rejection. So when something has been dropping and you think it will keep dropping, but you see a very long lower wick, I told you the long lower wick of a candle represent the activities of buyers in the market. And when there are so many buyers in the market, the price will definitely go up. So when you see those long lower wick, it's just a bullish rejection. That means at that point, there might be a change in trend from a downtrend to an uptrend. So you want to take note of breakout traps before you enter a breakout trade. Breakout traders tend to take trades after a breakout. Do you understand? So if you want to be a breakout trader, you have to be patient with your trade so you don't enter breakout traps. You want to make sure that the candle ended above resistance or below support before you take your trade. And remember, there must be conviction with that breakout. There must be a lot of volume with that breakout. So I hope you understand breakouts and breakout traps, and I hope you use them well when you are practicing how to trade. So we'll see in the next videos, and in the coming videos I'm going to be talking about margin trading. I'm going to be showing you how to register on those exchanges. I'm going to be showing you the difference between trading on Binance and trading on Bybit. And Bybit is for margin traders. I'm going to be showing you how to calculate your risk reward ratio. I'm going to talk about risk management. Thanks for watching, and we'll see in the next lessons.